Welcome back. Well, for the markets, not moving too much. So we have the Nifty just about flat, advanced decline ratio also quiet. So overall, it's a stock-specific day. A lot of stocks in focus on news, but overall for the indices, we're quite quiet. But how do we approach the markets going forward? We have Anirudh Garg from Inva Asset PMS joining in now to discuss the market fundamentals and his top sectoral picks. He's with us in the studio itself. Anirudh, hi, welcome to the show. Thanks very much for joining us in our studio. Wanted to just start by asking you about your overall take on the markets. We are done with probably a lot of the negatives, when it comes to the geopolitics, at least for some time. What's your sense in terms of how we approach the markets going forward? What would be the key trigger? Would it be earnings or would it, say, be the US trade negotiations with India?
Okay. Thank you, first of all, for having me. I think our stance has been very, very clear since February. It was February, around mid of February, when we went all in and deployed 100% of our cash that we were holding before it into equities. And the triggers for the market, I believe markets, I had given a podcast then, and I was very, very clear that we should see, with the relative changes that are there in the Indian market right now, we thought that we should hit 26,300, the all-time highs, maybe in the next 2 to 3 months. And of course, that's also just a number, but overall, we have to look at the broader picture. The broader picture is very, very intact. Look at the GST collections in India. We are at 2.05 lakh crores. This has been the highest ever with a 16% growth. So I believe this is a relative change that will take the markets forward. Also look at the SIP that is coming in. We are at 26,000 crores. Yeah. So these are the factors that are taking things forward. And of course, as you rightly mentioned, the US-India trade deal, I think it'll be a game changer, especially for export-oriented units, especially in the auto sector, auto ancillary sector, maybe in the textile sector. We are seeing a lot of things moving up and down in the textile sector. I've been talking to manufacturers. So I basically belong to Ludhiana, and a lot of textile hub is there. So their orders are full, the capacities are full, they're running 100%, they're installing more capacities. So I think it's a golden moment that we are going through India, though the valuations are up, and India always has commanded, I think, above average valuations when it comes to developing and emerging markets. Why? Because we are the only place except the US where the democracy and the demography are both in place. Because of this factor, this rare combination is very, very hard to get.
Okay, so 2 points in that. You spoke about systematic investment plan or the SIPs at 26,000 crore rupees. You spoke about how we are trading at higher valuations. So 2-part question there. SIPs are higher, but so are the cancellations, right? So does that indicate there's some caution in the market from the retail side? And second, on this geopolitical crisis that we've been seeing, how are we not getting impacted by that at all? Because supply chains, be it in the chemical space or be it in the other export-oriented sectors, is getting impacted to some level.
Okay. So to answer this point, let's address the geopolitical concern first. See, the geopolitical concerns are there for the very, very short term. Yeah, of course, you're very right in saying that the supply chains are being disrupted and everything, but they're being done only for very, very short term. In the market, it looks for at least the next 2 to 3 years of earnings and sales and everything. So I believe that from that point of view, I've been a firm believer of the fact that a bull market, it rests and increases its pace on bad news. So I always tell my team that a market feeds on bad news, a bull market feeds on bad news. And similarly, the opposite is true for a bear market as well. So I don't think this geopolitical correction, any corrections that come due to geopolitical tensions and everything, I think they'll be very, very short-lived and just an opportunity to buy.
And on the SIP bit, do you think that's
the SIP bit is also, again, we have to look at the broader picture. The broader picture is moving up. In the short term, if cancellations are there, that is due to the fact that there is fear in the market. Yeah, that fear in the market would lead to, until I believe on the other side, I believe the cancellations are good. I'll tell you why. Behaviorally, I'll tell you. Because the more the cancellations, the more is the fear in the market, the more is the opportunity in the market to go up. As the confidence increases, as everybody, because of the FOMO factor, steps in, the markets, it becomes heavy and it's difficult for you to earn. So I think overall, the SIPs are going up. That is the broader trend you should focus on. Cancellations in the short term are actually an opportunity which is indicating that there is still steam left in the market.
Okay, your top holdings are interesting. You have BSE as one of your top holdings as well as Mazagon Docs. Both these stocks have run up very significantly. You probably entered at times where they had already seen a significant run up as well. How much are you sitting on in terms of returns at this point in time, and when do you think you'll probably exit those stocks? What's the target that you're looking for?
So the first time we bought Mazagon and BSE both have been our long-term holdings. Though we keep on trimming them, buying them again from time to time. But I think these are the two stocks that you have talked about are our long-term holdings. We bought Mazagon split bonus at around 650, so 300 something, and have been holding it since. And the relative changes are very, very big when it comes to BSE or any other companies in the financialization of asset space. This asset space is doing amazing in India. Let's look at the last 10 years. 2015, we had around 2 crore demat accounts in India. Till 20, they increased to 4 crores, doubled in 5 years. From 2020 to 2025, from 4 crores, we have gone to 20 crores. We are touching 20 crores now. Yeah. So these companies, same is about the folios. The folios have gone up 8 times in the last 10 years, from 3 crores to 24 crores. Same as we talked about the SIP inflows, from 3,000 crores to 26,000 crores. Yeah. The total asset under management of the mutual fund industry or the financialization of assets industry is around 72 lakh crores. Yeah. So which has increased 6 times in the last 10 years. So overall, this sector has a lot of tailwinds, and still we are just at 10%. Developed economies are at 60, and people ask me, will we be able to touch the developed economy percentage? I believe that why touch? We'll be able to surpass them. Yeah, the reason being we are better savers. The saving is in our blood, Indians are better savers and better investors. So I believe that this industry for the next few years should keep on rising.
So won't the growth level slow down? Because we've seen that stellar rally already in terms of growth, in terms of folio additions. Don't you think that growth will slow down right now, and most of it is already priced in?
No. Could we say that this in 2020? In 2020, in the last 5 years, we saw 5 years a double. In 5 years, it has become 5x. So I don't think it will slow down. Of course, there'll be moderation, and that we are seeing in the last 1 year as well. But overall, the size is becoming big. And as a PMS or a mutual fund industry, your overall AUM size matters. The overall AUM size is getting bigger, and as the market increases, now you have set the culture right. It's a decadal generational shift which has happened. Once you've got the base, now the market is also going up, which is increasing your base. Yeah. So overall, I believe that the fees and the opportunity in this sector is very, very large.
Okay, so those are the Eicher Motors sales. The Royal Enfield sales are up around 22% on a year-on-year basis, and in fact are better than what the street was anticipating. So just watch out for that. Eicher Motors in focus, up 22% for that particular stock in the past 1 year. Anirudh, you've mentioned that we're going to see probably all-time highs in the market. You've invested in stocks which have performed really well. But where do you go from here when it comes to stock picking? Because the market gets tougher in terms of valuations, in terms of good quality stocks as well. What is the criteria you're looking at? What are the kind of stocks that you're picking now?
So our focus, our strategy is based on relative change. By relative change, I mean advantage that a company, sector or a group has today, which it didn't have earlier. So we are just focusing on relative changes and investing in the better companies out there. Firstly, we talked about the financialization of assets.
Can you give us some examples?
See, for financialization of assets, we've moved from FD-oriented culture to an equity-oriented culture, which is a generational shift. Doesn't happen often. A lot of effort has gone from SEBI, from AMFI and Mutual Fund Sahi and all. And over the last 20, 25, 30 years, we have developed the trust where the public can now trust mutual funds as they trust a bank. Yeah. So very, very difficult to gain trust. So this is one theme which is out there. Second, I believe that we talked about the GST collections at 2.05 lakh crores. This is giving a huge, huge opportunity to the capex-oriented sectors. Now, one has to focus that the capex-oriented sectors like railways, defense, infrastructure, power, they've gone up significantly in the last 5 years. Now, the most critical ones out there, without which you cannot survive. For example, defense. We've all seen defense go up many folds, but I think it's just started. We are on a global turmoil. As you rightly said, there's global wars going on throughout the world, and India
I just want to interrupt you there. We are, the theme is probably already played out to a large extent. So within that theme, which are the stocks you pick, considering that many of the stocks have already seen that strong run up?
I think within the theme, as I rightly said, that we should focus on companies which are now focused on earnings. We have seen the first part of the rally play out where they were re-rated because they were neglected. Now, where the earnings would catch up. For example, something like a Mazagon Dock, we like a lot. Something like a Bharat Electronics, we are holding in our portfolio. Something like Bharat Dynamics, we are holding in our portfolio, the better ones, which are getting orders and which are able to execute those orders faster. Yeah. So something like an HL we are not holding because we believe that there is a lot of delay in execution of orders. So for different sectors, different things you have to see. Especially for capex, the main thing is execution because orders are coming. Now the orders, a significant thing I would like to mention is that because of the delayed payments from the government in the past 1 year, the order outflow from the government has now reduced and it's only coming to critical components and critical projects. So we should focus where the critical projects are. Something like a Kavach.
Right.
Yeah.
Okay, all right. Take that point. A very interesting discussion there, Anirudh. Thank you so much for joining in. So that's the word and that's the fundamental outlook on markets as well. We'll wrap up on this conversation for now, but let's